Setting up the Fibonacci tool is like picking a restaurant on a Friday night. You've got to know what you're doing, or you might end up with something you don't like. Just select it from the menu and apply it to your chart with confidence. This foundational step is crucial for accurate analysis, and trust me, no one wants to make a decision based on a half-baked setup. Now, customizing the Fibonacci tool is where the magic happens. Think of it like decluttering your closet. Remove the unnecessary elements and tweak the settings for clarity. After all, we want to see the important stuff without having to sift through the chaos of a chart, just like finding that shirt you bought ages ago but never wear. This clarity helps traders focus on essential data, leading to better decision-making. Adjusting the font size and line thickness is like upgrading your reading glasses. Suddenly everything is clearer. By improving the visibility of Fibonacci levels, you're not just making your chart look pretty, you're also setting yourself up for more confident and informed trading actions. Because let's face it, squinting at your screen isn't the best way to make big bucks. Let's talk about colors, shall we? Changing the colors of Fibonacci levels according to their importance is like organizing your sock drawer by season. It makes it easier to quickly identify critical areas for potential price reversals. This clever color coding helps ensure you're making timely trade decisions, rather than playing a game of Where's Waldo but with numbers. Now, the significance of the 50% and 61.8% Fibonacci levels is akin to spotting the main act at a concert. These levels represent deep pullbacks in trends and indicate strong support and resistance zones. Essentially, if you're a trader, these levels are like your trusty map in the wild world of stock trading. You definitely want to keep an eye on them. Incorporating Fibonacci retracement levels into your trading strategies can be like having a secret menu at your favorite cafe. It reveals valuable trade opportunities that can guide you in making informed choices based on market movements. So, those who understand these levels will find themselves sipping a fancy latte while their trades brew nicely. Understanding impulse and corrective moves is vital. Impulse moves are like a strong espresso, they indicate powerful market momentum, while corrective moves suggest potential pullback opportunities for entry. It's like knowing when to strike while the iron's hot and when to sit back and sip your coffee in peace. Let's not rush the good stuff. The importance of waiting for confirmation signals before entering a trade is like waiting for your toast to pop up. You wouldn't want to jump the gun and burn your breakfast, would you? Traders should look for candlestick patterns that indicate a trend change at Fibonacci levels. Patience is key, people. Good things come to those who wait, especially when it involves money. Analyzing price action in conjunction with Fibonacci levels provides deeper insights. It's like trying to solve a mystery. Recognizing where the price reacts to these levels can enhance the timing of your trades significantly. It's all about piecing together the puzzle before making your next big move. Identifying candlestick patterns, like double tops, is crucial for confirming trend changes. These patterns are like a set of road signs guiding you to the best entry points for short trades. Ignoring them is like ignoring the GPS. You might end up driving in circles with a dramatically perplexed expression. Combining Fibonacci levels with support and resistance is like pairing wine with cheese. It enhances the quality of your trades. This approach increases the likelihood of successful trades, making sure you're not just flipping coins and hoping for the best. Cheers to maximizing profits, right? Finally, utilizing moving averages along with Fibonacci levels helps traders spot trends with more accuracy. This combination is like having both a map and a compass. It guides you in making informed decisions regarding trade entries and exits. Because who wants to wander aimlessly when there's money to be made?